We've been cutting interest rates quite aggressively for a little over 12 months now. We know that it takes 12 to 18 months for the full effects of any interest rate changes to flow through the economy, through activity and into ultimately inflation. What we've seen is the reaction to our interest rate cuts so far being a bit slower than we had anticipated. And that's partly because, things change in the interim. We had Liberation Day in early April and all the global policy uncertainty that's been surrounded by that. The surprise for us since May has been what a prolonged impact that's had on business and consumer confidence in New Zealand, despite the fact that we are kind of outside of those worst case scenarios that we talked about in May around how that could have escalated and got much, much worse. So there is a bit of a hangover there. We are seeing the July numbers that are starting to come through are starting to pick up. So we are seeing the PMI and the PSI that were out over the last week or so are looking more in positive space. We've got interest rates, effective interest rates for mortgage holders that will keep rolling lower as they come off those fixed rates and refix at lower interest rates. We just think monetary policy eventually works and we start getting that recovery.
The other thing that's happened is the uncertainty measures have come off as well. So at the peak of the ongoing discussions globally around what was actually going to happen with tariffs, uncertainty measures just escalated dramatically, and they've come right off as well. So there's a feeling of more certainty around understanding where tariffs may land, and the retaliatory issues that everybody was wondering about whether they would happen have not happened. So as a consequence of that, there is a higher degree of certainty that's sitting there. Not great. It's not good for anybody that tariffs exist and that they are heightened, but
at least know what we're dealing with.
Less so, and whilst New Zealand's up 15 versus 10, on average, those numbers that have come out to date are definitely aligned with what our expectations were in May.
So just sort of, I appreciate, I want to just sort of set the tariff talk to the side, for, I'm sure other people will bring it up and say, but I just know that yesterday, Paul, you said that the RBNZ can only do so much to help stimulate growth and productivity. So can you just talk through that a little bit and provide a bit more context to that, and who does need to stimulate growth and productivity then?
So just to sort of summarise what Karen and the Governor have been saying, the economy did grow Q4 and Q1 this year. We had reasonable growth, 0.5 and 0.8. Then we sort of hit a speed bump, a speed wobble with so-called Liberation Day and all the uncertainty that created. So Q2 is going to be probably negative and Q3 is going to be pretty soft. And then we've got reasonable growth kicking in from Q4. But I think the interesting aspect of your question is we haven't seen growth in house prices. And for many decades now, growth or house price inflation essentially has generated a wealth effect and has been a real kicker for this economy. It's been a real source of growth for better or worse, along with strong population growth from migration. So the question now, and we've got a half a chapter in it here in chapter 4.1, is how is this economy going to grow if house prices stay flat, which is our projection, at least for the next year or so.
So I mean, a heap of us would like to think that perhaps our children could buy houses one day. So, I mean, sort of we're buying into, was it the line, is it Bernard Hickey's line, that we're a housing market with an economy tacked on?
It's tacked on.
We do need to try to move away from that. So it's a really tricky position.
Yeah, it is. It's a very interesting spot. And of course, you're right. The answer is, productivity growth. How can we sort of spark up other bits of our economy beside the housing market to get growth going and to get incomes going up?
Okay.